This is Joseph. It's Thursday, June 13th, 2019. Time is flying. So I'm going to take a look quickly at SPY today in terms of chart mojo wave force pattern and time zone theory. And I'm going to compare it to or run it along and with this, what I also use. And I use I use tick-to-Q on another platform, and next to it I have a high-low streamer, which this at high minus at low is about as close as I can get to it in trading view. But somebody asked, how do you really follow that? It seems choppy. And my contention is that it leads, and that if you know where the moments of the aha moments of where the market looks around, where it pivots, where it gets into a wedge or an apex, usually around 10:30, 1:15 on the open, various times during the day, and you look to tick and tick is breaking, it'll give you a heads up. And the at high at low, it's like all the highs, new highs of the day minus all the new lows of the day adds another dimension to tick, which is really sort of like advanced decline where more things are moving up than down, etc. But if you add this dimension of how many, when the market's going up, really the highs, I can see it on a streamer that I have, the highs are buying and the lows are not buying, are not selling. And when the market's going down, that shifts around from the highs of the day stop selling, and then the lows of the day the highs of the day stop buying, the lows of the day start selling. And so there's this shift that's always going back and forth when the market's going up and down that you're not really seeing. You're just seeing the end result in something like SPY or whatever you're trading, and which is a composite, and it's the last thing to move. The runners, the tick, some of the internals, the faster moving high beta stocks and ETFs move first, and when the critical mass of those get turned around and going, then it turns these composites around. So if you're watching the right things, you can get ahead of these things. And if you're using these things to trade futures like SPY to trade ES and Qs to trade NQ, sometimes NQ leads a little bit, but often it runs parallel to. And if you're watching all those things, you can get little aha moments and get ahead of, especially if you know tendency probabilities in intraday market directions and tendencies. It's the only way you can really get in front of what you're seeing on the chart, is to know what high probability tendency is about to occur, and then you're looking for it. The old saying is, if X occurs, do X1. If Y occurs, do Y1. You have to further expand on that and say, imagine different scenarios and take the one that confirms. Imagine the high probability one first. And if you know tendency and you're looking at things that are leading, like tick and high beta runners, it gives you a little heads up on SPY, on QQQ, and it gives you just a little tiny edge where you can get in front of it instead of being at the mercy of the result of it. So anyway, I'm going to, when you had a strong initial move up here, and let's see if I can make that volume profile go back behind. Get onto that. Excuse me. It's not the easiest thing is to show you how to try to explain what's going on, because there's so much that's dynamic intraday as it's happening, and then it looks different when you look back on it. Like a moving average will look different than it was in real time. Actually, some things is that the future occurs on a market. It changes what's in the past. It bends some of the moving averages and various indicators and lots of different things. It's really hard to go back and explain. It'd be much easier if I could just replay this and explain it as it goes along and what's happening next. But these things don't work. A lot of these indicators and strategies that I'm using don't work when you replay it, so I can't really do it. But I wish I could, because it would be a lot easier to explain it. But anyway, strong initial move was a gap up. So right away you're looking for people in strong positions. In this case, long. We'll be looking to somehow think about going neutral by 10:30, back to VWAP and point of control. So generally around 9:45 they start thinking about that. Oh, this is a strong move, but you're not thinking about it if you're just in there going with it and you don't know the tendency. But anyway, if you're looking around 9:45, people start thinking about, and that's 9:45 right there. They start thinking about how to get neutral. So maybe they think, well, it'll run a little more and then we'll start selling. Or maybe they just start thinking, in this case, they start thinking, well, I better start taking some off the table, and they start selling into the buying, and then eventually people up here that don't want to get trapped long, and people that were up here ready to take profit up there, they also come crashing down. They do market order sells, and that gives you this kind of a candle here. And you don't want to be after that. You are in it. You want to be before that happens. You want to be back, selling back up in here if you know the tendency. Anyway, so, and let's take a look over. If you're watching something like this, you can see that tick is trending down almost from the get-go. And both ticks, tick, the New York tick, the Nas tick. Same thing with the at highs. Initially, it starts off, 0 is kind of an even number, but so there were more instruments above 0 at highs than there were at lows. So when you subtract all those at the highs of the day and the lows of the day, you get this trend line in here, which could be a candlestick, but I've got it on the area. It makes it easier to see. So right away, that's trending down. They're not waiting. They're not going up and waiting. So you see these divergences, and it gives further credence to the fact that this isn't going anywhere because those have already turned around. And if you know the tendency, you start selling into that. So anyway, so then it puts on a move that they say generally occurs 9:50 to 10:10, and there goes your move right there, very strong to 10:05. So it's within that window. So let's see what happens at 10:05. Okay, there's 10:05. If you look over here, these bottomed out at 10, 10, 10, 10. So these have already diverged up. Your ticks have diverged up. Your at highs, at lows have diverged up. And then guess what happens over here? So 5 minutes later, it starts moving up. So there's plenty of time in there to start looking for this move, to start buying into that selling. And you know, what's it going to do? It's aiming for neutral at 10:30. So this is 10:30, and where does it go? It goes right to neutral. It goes right to the VWAP and 50% line, which is unwound. And I can't tell you how many times it goes there, but a zillion times a day. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 at least. If you step it down to 1 minute, it's probably twice that. But some people just play the returns from extremes to that. Notice I don't have any moving averages on here because they're just that. They're just moving averages. They pale in gravity compared to opening 1 minute range, the yellow zone, VWAP 50% zone, and point of control. Those 4 things will tell you, and I like this 30-minute initial balance as well, because things trade around those in certain tendencies. But anyway, those magnets have much more power than any moving average. I can put some moving averages on here and different time frames, and they'll touch somewhere. And there's a few traders trading those, but nothing like the traders that are trading these. And I don't know why so many people are hung up on moving averages. Where a moving average is really handy is, let's say a trend line. Let's say if you put a trend line on here. Sorry, I'm rambling a little bit. But if you put a trend line on there and just put an alert on it, wait for it to break, that'll give you a heads up that something's changed, right? Well, what if this action is curved? That's when a moving average would come in handy. Is if you could run a movie, if you could dial in a moving average like so that would run along the lows and put an alert on that, and then when that breaks, that would give you a decent signal. But in terms of just running moving averages, moving average crossovers, all that stuff, just go ahead and try to calculate out a moving average crossover strategy and let me know if it makes any money, because I haven't found one yet that does. It does in certain conditions sometimes, but not very well in all conditions all the time for sure. So anyway, we get that divergence up. Now let's see, so it pushes to neutral, then you're looking for whatever the 10:30 guys are going to do. They're going to assess all this. They're going to come in and put a big move on, and then they're going to cover from 11 to 11:15 generally. So let's say here's it's still going up a little bit. Here's 10:30 at neutral. Seems to peak out around that 10:35. And let's look over here and see what. So 10:30, that peaked. 10:30, that peaked. 10:20. This was already coming down at 10:30, so it was already diverging, and this was already slightly coming down at 10:30. So right away, those four things together, if you were looking at that, would confirm that this is a peak right here, and that it's going to go back to neutral. And these 10:30 people are going to put this move on. So they put this move on, comes down, and peaks out around 11:05. Let's see what happens at 11:05. So 11, it turns up. 10:50, it turns up. 10:40, it turns up. 10:40, it turns up. So you can see how these lead. And somebody today was telling me, well, when I watch tickets, just jumpy, and they're watching it at 1 minute or whatever, and I don't really get how it's working. Does it take a long time? Yes. The simple answer is yes. You watch it. You don't trade off of it. You're trading off your charts, but you're glancing at it now and then. When you get to these apex points, like 10:30, these look around moments, let's say, and if it breaks ahead of that, that's a hint. That's where the market's going. So you know where this is going to go. So the aha moments, like, well, there's an aha moment at 9:45 for the counter initial trend move, and then there's a positioning move into 10:30. You could also look around there. Also at 1:15, it's supposed to trend up around, or wedge up around mid-range. And if it's above it a little bit like it is there, it's a little bit of a slightly bullish bias at that point. But you can, so here's our little wedge here at 1:15. So you're looking to see what the 1:15ers do, and they like to exit, like they put on a move here, right? It's sort of like they put on a move there. So your bias at that point is just do what they do, even if it's up a little then down. But let's just look at that up a little bit. So that's up to 1:30, and let's see where this breaks down. 1:30, let's see. So this breaks down at 1:40. This breaks down at 12, never looks back. This breaks down at 12:50, 1:40 to 12:50. So the 1 o'clock, 12:50, 12 o'clock, and then it's already diverging, no problem there. And 1:40, another little drop there, 12:50. Anyway, there's some divergence in there. It's not as clean, but if you were looking at that and looking for what this was going to do at 13:15, and right here at 13:30, you would see some divergence, and it would help if you were looking at some runners like Fang and some high beta movers along with these. You'd have a little bit more insight into what's happening here. Not always, but at any look around moment or any wedge time zone or where an expectation of change would be, if you look to these, you want to see what they're doing. You want to give them weight, and they may be leading. So the way to look at this is, tick is pretty volatile. It rises and drops. But if you're thinking of shorting, and you see tick like right in here, and it's rising pretty hard, and let's say this is above zero, and this is above zero, and this is above zero, you don't want to short. You generally, when these at-highs, at-lows are spending time below zero, the market is going down and staying down below the open or the average of the day. When it gets up above, that's a different story. Then your highs, they're buying the highs. They're not necessarily selling the lows, but they tend to sell the lows, buy the highs. And so anything up here is bullish. This is bearish, bullish, bearish. So if all four of these are up and they're rising, well, anytime all four of them are rising, the price is going to rise. But if you're looking at this, see how this jumped at the end, and it's so far above zero. That's so far above zero. This jumped, stayed up, really sharply jumped, got up above zero. If you look at the times on those, you'll see that it led this. So overall, there was a lot of 5-wave patterns in here. There were a lot of inverted head and shoulders, regular kind of head and shoulders. You're always looking for five tweaky waves into head and shoulders, inverted shoulders, et cetera, et cetera. But look how it just kind of ranged around. People call it a flat day. I call it a range day. And it's ranging around what? It's ranging around the opening 1 minute range, this yellow zone, which is the big gravity, which is where everything gets delivered. When it was going down and breaking out of the early range to here, you run the support line from the opening 1 minute range from the day before, and by golly, where does it turn? Right on it every time. There's no price there. There's no gap there. There's no anything where it's indicating that it was spending a lot of time there. No, that was the support of the opening 1 minute range where the entire market got delivered. It was the initial strong support. So, and also if you combine these 2 days together and you run the 50%, you would have seen it stopping on the 50%. If you ran the volume profile on the whole thing, you would have seen some important turning points and volume levels on that too, as well. I'm not going to get too much into point of control today, except that whenever it moves to price, it's a heads up. When it moved here and then capped this strong move down. It's also the one, anywhere in here you're asking yourself, where are we in relationship to 115? If you want to know what big money's doing, here's 115. They're selling. You don't have to think about it too much. And they cover here. They cover around 230 here to there. Then they also like to cover an exit by 330. The ones that think it's going further will stay in or they'll re-enter, take it to 330, and then cover. So they covered at 330, comes up to the sell tier just below the opening 1 minute range, which is there's always a group of short scalpers that like to scalp short when it returns, especially from a distance up to that opening 1 minute range. So here you got the 30 minute range, the 1 minute range. So they're targeting it off the low. They say, okay, let's go long, let's cover, let's flip and go long, and then they'll exit in a sell tier right around this. And then when it stops and turns, then if they have any other profits to take up here, they just market order down, and you get that right there. This was expected back to normal. That would have been a stasis day. Opens in there, ends in the middle of the opening 1 minute range on the big confluence of the POC, the VWAP 50% of range, where it spent a lot of time today. And all of a sudden, the last minute there was a pop. I think there was more covering. Generally that's where people come in and make bets on the next day. But this felt more like there were some people that wanted in, even if you can't tell if it's just more covering or people wanting in for the next day who wanted in bad, and they just hit market order buy, and that's what gives you that. So it'll be interesting tomorrow to see how that follows through after market. But anyway, if you're playing this and if you're trading ES off of this, you get a good heads up on this. These are from Sean Z. Bollinger Band optimized signals. They're pretty good. I like to run these particular things here. Anyway, I'm not going to get into those right now. But so anyway, I was just trying to point out how these relate to what you're seeing here and how they lead. They diverge first. And if all of them are turning in the same direction, you don't want to be against it. If all of them are above zero, you don't want to be going against them short. If they're spending a lot of time below, that means the market's really heavy. The lows are selling. A lot of stuff moving down as opposed to moving up. So you just don't want to be on the wrong side of these. It's real easy if you're just trading this and just trading signals on here to get on the wrong side of this. And that's what you don't want to do. You want to be on the right side of what's happening over here. And if this is leading and diverging, you want to be on this, and you're expecting it to change, something to change here. I'm running alerts, so I'm getting alerts that really are keying off of just anything changing from extremes. Like I do have an ultimate strategy alert that's running in there, and I have some alerts running off of these. I have some various kinds of alerts running. So if it's coming down, and I hear a lot of chirping, that means I'm getting a lot of buy alerts. So then I quickly look to these, and then if these are diverging up, I know it's a buy. So, and if they're above or near neutral, even better. Or they're coming from an extreme, you just kind of have to get used to. It's hard to describe exactly how it works, except if you just watch it long enough, you just look at it and go, aha, you see something here. Maybe you hear your alerts going off. Buy alerts, like right down here. It's a time zone thing. You're expecting the 330 covering. Your alerts start going off. You look over here. It's diverging up. What more do you need? I look around and I see things popping, and I jump on it. And scalping in the ES and NQ. And if I hit it just right, I get those surges, and that's what you're looking for. Anyway.